During days like this, the real nature of crypto gets revealed to the people that look closely enough. Crypto prices are not driven by the masses, they're not driven by long-term investors, they aren't even driven by the short-term speculative money. Crypto prices are driven by the market makers and by the people that want prices to go up and down based on what's most profitable on the derivatives market. Now, this is a very uncommon view, but I want to share the details based on what's currently happening with Onyxcoin, so XCN, and the Trump token. Because have a look at the price action today. The market as a whole tends to rather decline. Most altcoins are down, but there are two clear outliers, namely the Trump token and XCN. And so isn't it interesting how price appreciation tends to happen very quickly and price deflations tend to rather happen slowly? It's what we see today. It's also what we saw this week. And even on a broader time scale, right? The appreciations happen quickly, the price retractions take their time. And it appears as if the price appreciation isn't even linked to anything. We don't get any news around XCN. Onyxcoin hasn't had any big announcements. Yet sometimes the price jumps like this. And it's not just for Onyxcoin, it's for various smaller altcoins. The truth is not in the spot market. The truth is lying behind the perpetual futures market. This is where there's way more trading volume. If you are looking at charts like this, you are missing the point. Because obviously prices in general are very much influenced by the macro. So when Bitcoin is going up, the altcoins go up as well. When Bitcoin is going down, altcoins go down as well. So there's some pollution of the data in terms of what the altcoin specifically is doing. But there's also a problem in the way that we don't see the standing of an altcoin within crypto. This kind of chart, for example, is way more useful. This is now XCN relative to Bitcoin. And again, we see the price appreciations happening very, very quickly and the price deflations take their time. Now, what are those quick appreciations? Again, those are driven by the market makers. This is not a lot of retail investors suddenly jumping onto the token. What's happening here is that a lot of smaller investors saw the price of XCN going down versus Bitcoin over time and then betting on falling prices. Now, if enough people bet on falling prices, if this becomes a popular trade, then the market makers just buy up the supply, push up the price very quickly so that the people can't really get out of the position quickly enough, creating all of those liquidations. And when liquidations happen, the price goes even higher. And that's then what we see in the net performance. The liquidation fees go directly to the centralized exchanges. And centralized exchanges are market makers as well. And so with the larger altcoins, especially the ones that don't have any fundamental basis behind them, the large altcoins that are hard to manipulate until infinity, but that also see their pump and dumps, we can see the structure very clearly. Again, when we look at the US dollar chart here now of Dogecoin, the largest of the meme coins, we don't really know what's going on. But when we look at Dogecoin relative to the entire market, so the Dogecoin dominance, suddenly we get somewhat of a trading range. And again, we've got our pumps and slow deflations, secondary pumps and slow deflations. This is something that continues going on. Those are short squeezes. There's no reason why a single tweet by Elon Musk should double the price of a cryptocurrency. But if enough people are betting on falling prices, then squeezing that asset makes a lot of sense. Sometimes we do see a secondary rally, right? So this is a squeeze, then deflation, then secondary rally, then final collapse. Sometimes a secondary squeeze, and there are times where the secondary squeeze even goes beyond the primary one, but usually it's pump, deflation, secondary pump, final breakdown. And so this is happening with XCN as well, right? We see the pump, the deflation, the secondary pump, and it's not always easy to pinpoint exactly at what point the short squeeze will end. That's the art of the game. But the general direction is clear, right? Once we have seen a rally, at some point we will see the deflation. And this seems to be happening now with Onyxcoin as well. We got the rally, we're coming back down. We do see secondary short squeezes every now and then. And whenever there is a secondary squeeze, it's a splendid way to get into the short, because then most other shorts have already lost their money and don't want to touch the token anymore. So directly betting on this first squeeze itself is risky. Betting on the secondary or third squeeze is less risky. Now, I'm a man of data. What kind of data do I have that actually backs up that the price is influenced by the bets on the price, by the derivatives market, and not by the spot market? Have a look at this. This is the XCN open interest on the perpetual futures. So that's the area in green, and what we see in yellow, that's the price. There is a stark correlation between the two. As there is more trading on the derivatives market on an asset, the price tends to go up and vice versa. And why does the price fluctuate so much? Again, it's because of the sweet liquidation revenue. The price goes up because the shorts lose so much money during a rally like this. That's the fundamental reason of all of that price manipulation. I have a look at the Trump token, right? Trump recently is rallying and the shorts got liquidated massively. And now the Trump price tends to go down again, and so the longs get liquidated. The price always moves in the opposite direction of where most people are positioned. This is an exercise by the market makers to farm as much stupid money as possible. But yeah, if you know what you're doing, you can take advantage of this, right? The vast majority is losing, but have a look at what our community is doing. We tend to make money with a lot of trades. This is just what the community is sharing. I'm of course sharing my own trades as well. And yes, I'm also in nice profit with a Trump short that I've opened after a secondary squeeze. That trade, of course, has also been shared with the community. So it's all about trying to figure out what the market makers want to do. And we cannot be right every time, but if directionally we are doing the right thing, then we will have more wins than losses. And that's what it's all about. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.